In this video, we're going to talk about 6 mistakes traders make in a bull market. Stay tuned. Hey traders, a very warm welcome to you. Okay, so I'm going to hold my hands up here and say, you know what? I am not that good in swing trading in a bull market because I make these mistakes as much as many others. Why I know that I'm better at day trading. I'm actually far better on the short side when the opportunities are there. I'm better at more explosive stuff. So I kind of focus my energies on what I know I'm good at. And probably because the majority of these kind of things here are things that will affect me when I'm swing trading, especially in a bull market. All right, so if these are similar to you, then give it a thumbs up and add yours in the comment section below. But is the mistakes that traders make in a bull market, and predominantly we're talking about swing traders looking for that kind of 3-4 week plus month move. Number one is they wait for a correction that never happens. You know, bull markets, they go on and they go on and they go on, and the correction just never seems to happen. And they're waiting and they're waiting and they're waiting. A true bull market, guys, you can buy it on a stagnation. And actually, if you kind of put that into perspective with day trading, if you have a really strong trend day, it's the same kind of thing. The big pullbacks very rarely occur. It's just pauses, then another leg, pauses, another leg, and it's slow and it's steady, and it's very challenging actually from a day trading perspective sometimes to do that. You have to just kind of bite the bullet and chase it, which is counterintuitive to most scenarios when you're trading. So it's why I think a lot of more aggressive, shorter term traders kind of struggle with this chugging bull market. And actually, this is the kind of time when people make the most amount of money. You know, a lot of guys who are buying a lot of good quality stocks and good markets that are pushing on can sit back and let the market ride them and make the money. So hats off to people who manage to do that. If you've had a good years in the bull market, then well done. So waiting for correction never happens. Very common on that. Number two, don't buy the small dips. As we just said, the dip's never really that big. You know, often it's the small little dips, they sit and people are waiting, and then it goes on again. And that's really what caused it to go on again, because everyone's waiting for that deeper dip, doesn't happen. And then it pushes on again and it just keeps going and going and going, doesn't even pull back, and it's just solid, solid, solid. Often it's very methodical and slow. Sometimes you get bull markets that are very, very aggressive. But most of the time it's just plod, another up day, another up day, another up day, another up day. You know, small down day, other up day, and before you know it, the whole month's up good, and that's generally, you know, how things will progress in a bull market. Number three, bears are always looking at the short side. Hey, you know what? This is one of my early mistakes from a day trading perspective. If we talk about an intraday strong trend, I'd always be kind of looking for the reversal. And you have to categorize it as a trend day, same as you have to categorize the market you're trading as a bull market. Forget about the short side. The time will come. There will be a time when things will turn, or you go and find a market that is a bit more conducive to the short side. You know, that's a big thing that can kill you. You know, you're always looking for that short side. You always think it's a top, it's a double top. No. It's just literally just getting going. It's a pullback. Yeah, but it's going to push the highs again. And bull markets will do this and do this and do this for a long, long time before they turn. And the bears will just get squeezed and squeezed and squeezed. And on an intraday basis, that's what happens, you know, with the plod, intraday trends. People trying to short it, stopped out, short it, stopped out. And eventually, you know, it will turn eventually. Same with like a longer term bull market. All right, number four, fundamentalists will use logic and miss everything. You know, we see this all the time, guys, don't we? This is well overvalued. It's ridiculous. Yeah, okay, maybe it is on paper, but who cares? The price is the price. That's the agreed price. Supply, the demand is there. People are paying it. You don't have to agree with it, but you're wrong at the moment. You know, if your analysis can do all the analysis in the world that says it's worth 50% of what it is, but at the moment it's not. Now, do you want to generate a trade idea from that and then maybe add a short when the opportunity comes and you see that technical opportunity as well as the fundamental? Let's talk about being a good short seller. That's kind of what short sellers would do, recognize the fundamentals, but then not just blindly short, because the market can go on for years like that and be overvalued. We've seen it with many, many markets. People say it's a bubble, it's this and that. Yeah, who cares? You're going to sit short for 2 years in it? Or if you are, you're missing out on a lot of the move. And that's exactly what a lot of kind of fundamentalists do, look at it with logic. Number five, when a dip happens, they don't buy. So you get that dip, you know, I'm going to buy the dip. The dip happens and you think, well, actually, maybe it's a top. Maybe it's going to crash now. And of course, it goes back up to highs. Rinse and repeat this thing. It continues and continues and continues. And when you've really got to say, listen, it's a bull market, nothing much has changed, just price has moved on. Maybe the media are making a hype out of it, but in reality, what's changed? Nothing. Pull the trigger. As long as you're managing the risk on it, you can get back in on the wave. All right, number six, instead of hopping on the trend, they look for the crash. You may have guys who are kind of perma bears out there, and who are, it's probably very similar to number 3, isn't it? But these guys are always calling for the crash, and this is going to crash, it's going to crash, basing their logic normally on the fundamentals of the whole thing, which never comes. Maybe it comes eventually, but by the time it comes, they're long gone. They've decided that they're wrong, and they might even flip long. In fact, this is kind of a humorous thing, isn't it? Sometimes you hear people saying they're bears, and then all of a sudden they flip to the long side. They're like, oh, I'm wrong, I'm a bear. 5 years later, that's the top, it unwinds. So, people think the bull markets are easy, and actually they can be. If you're buying and investing and you're buying shares, you're going to get a lift from the whole of the trend. If you're a little bit more active as a day trader, I think they're a little bit more challenging because they're a bit slower, can be a bit slower. But if you align yourself with the long side and say, okay, well, align myself with the long side, look for my longs intraday and play it from that way. From a swing trading perspective, still aligning yourself with the long side, find the strong market, find the strong sector, find the strong stocks, and just kind of buy. As long as you've got your risk managed with any strategy, then allowing the whole tide to lift up everything and push the whole lot on, hold it for a long period of time, let the bull market work in your favor, and let things happen. And for me, I find this challenging because when I started trading was pretty much, we were in a bear market, very, very aggressive moves to the downside. And when it flipped to a bull market, this transition for me took a while to recognize, hey, you know what? Bull markets do just lift up. They might gap lower, but they lift up in the afternoon, that kind of intraday pattern, and recognizing there's a different strategy required for that. And same with swing trading. I guess if you're used to kind of volatile stocks that are swinging up and down, recognizing that when a stock's just in an uptrend, a little dip, you just buy it, buy a bit more, and that's what the kind of hedge funds do, and why they kind of get these really good results sometimes in bull markets, is because they buy these strong stocks, they keep loading up on the strong stocks, they keep going higher and higher and higher, giving them the returns they want, and they've got a plan of action for kind of when to come out. So that's the 6 mistakes traders make in a bull market. I'm sure there are more. Comments in the comment section below, guys. Take care. See you in the next one. Goodbye.